Can I listen to your podcast?
All right. Welcome to another episode of Middle School Music. This is season 2, episode 4, with your host Farhan Lalji and my good friend and colleague and co-host Dario Devet. How you doing this morning, Dario?
I'm good. I'm alive. I don't have coronavirus.
Oh man, it's taken over, isn't it?
Touch wood.
Touch. Find the wood in the podcast studio.
Use my head.
Yeah, it really has been something. I mean, we've both kind of been impacted both in our professional lives and our personal lives as well. I won't go into detail around that, but we can say London is experiencing some of the mania around coronavirus, a lot of events being canceled, including some concerts.
Yeah, it seems like this is having a massive effect on the media industry. I see some movie releases have actually been pulled back, like the new James Bond release. But, really focusing on the music side, a huge effect on the concert industry. I know in California, we have Coachella coming up at South by Southwest.
Yeah, South by Southwest hasn't been canceled, but there are a number of big media sponsors, like your Netflix, your Amazons, your Googles, that have pulled their sponsorship and are not having any of their teams go out for South by Southwest, which is a bit crazy.
Massive impact. Hey, maybe it gives artists a chance to actually get back in the studio and record some new material, especially considering everyone's so damn content hungry.
Yeah, that's true. It could be the Corona era of music in a few months' time, hopefully. I think you're feeling the major impact in Asia. I know Khalid, Stormzy, as well as Green Day, even Avril Lavigne, who is doing her comeback kind of world tour this year, has canceled a lot of Asian dates. And probably the biggest boy band in the world, BTS, has also kind of canceled a number of events they were going to have in Seoul, in Korea, so at their Olympic Stadium. So that's probably a lot of massive lost revenue right there, including kind of, as you were mentioning earlier to me before we started recording, the insurance industry and the impact of all of this on the insurance industry.
Yeah, think about Australia. They've had the fires and now it's still summer season, still festival season. The house scene is pretty big. I'm talking of house or dance music, however you want to phrase it. You've got Ultra Music Festival, Winter Music Conference in Miami. Hasn't that been pulled?
First time in 21 years that Ultra is not going to happen in Miami this year, which is a bit insane as well. Like, so we're really kind of seeing the impact of the coronavirus in a lot of these gatherings and a lot of these concerts and a lot of these events.
Absolutely huge. I wonder if a lot of this, I mean, obviously it's precautionary and, you'd rather be safe than sorry. But I wonder if some of it's not a bit like on part overreacting a little bit. I don't know. I mean, I think it's one of these better safe than sorry, especially in the Asian market where, kind of a lot of this, and especially in the US as well, where you're seeing a significant amount of death. I mean, I know the proportional percentages are quite low, but I don't think you want to kind of mess around, especially if there are a lot of unreported cases probably kind of going around, and I think at this case, you're kind of, at least, especially as it's early on in kind of the virus has spread still, we don't really know all the information, and neither of us are medical professionals, so it's kind of hard. But it does give a good opportunity for the industry to try new models.
Definitely.
If you remember, Marshmello did a live concert on Twitch through Fortnite, which had, I think, the largest, we spoke about this before, largest attendee of any concert ever. And so maybe it gives an opportunity for artists to maybe perform, particularly in Asia where this is more kind of the customary.
Yeah, I mean, U2 tried this ages ago with YouTube, which didn't go very well. And Coldplay then did it a little while after, right? But those were kind of very different in that they had concerts and they were trying to stream the concerts as well. Whereas like Marshmello's was really fit for that venue, right? Yep. It was kind of like, let's do a concert on Fortnite through Twitch. Right. In that sense, it was really kind of structured that way. And it'll be interesting to see if the music industry tries to adapt for some of that lost revenue by maybe being a little bit more innovative in terms of how they engage with fans in their own homes.
Take South Korea, for example. BTS could do a live performance. There are businesses that exist where you can donate to an artist or creative through their live stream. I mean, that's one effective way of saying, okay, cool, freemium model in the concert industry. We'll do a performance. You guys donate based on your interest, based on your fandom.
It's definitely worth the experiments. It'll be interesting to see if any kind of like big name stars, big name acts kind of take this opportunity to kind of experiment with that model.
I think you'll struggle maybe in the West more so than the East. Yeah, I mean, unless you're part of the gaming fraternity where it's customary to watch a lot of Twitch. I think a lot of other fans like to experience these events live. I haven't seen any effect necessarily on the London.
There haven't been any kind of London concerts canceled, although I haven't been to any in recent kind of weeks. So it's hard to know if that's actually having an impact in the place. Like, I mean, people might be buying tickets months ago, and even though the concert's going, it'll be interesting to see if there's still 100% attendance of all of those ticket buyers.
Yeah, definitely starting to feel like, hey, I mean, the commute in the morning is a lot more pleasant. You can get a seat on the tube.
And you are starting to see a couple more people with masks.
Yeah.
On the transport here than normal, even though kind of the authorities haven't recommended them.
3M getting all the brand exposure. Anyway, talking of things beginning with an M, we're here to talk about music. So
very true. What are we going to cover today, Daria?
Today, I want to get a bit geeky on you. Take things back a bit, away from the artist spotlight side of things. We'll get to that a bit later. But really looking at a very interesting fund structure, which is the Hypnosis Songs Fund.
Yeah, let's get back to our roots in terms of talking about finance and media. Right?
There we go. Really talking about how Hypnosis is the first of its kind, I think almost in the world, but most definitely in terms of its fund structure in the UK.
Why don't you start with the basics? So
okay.
Should we kick in and dig into hypnosis? Do you want to start maybe by kind of giving our listeners kind of the detailed view of what exactly hypnosis is and how it's structured?
Sure. So Hypnosis is the only UK-listed investment vehicle with pure play exposure to music royalties. So what I mean by that is that the fund in its entirety comprises of one asset, and that asset is music IP or music royalties.
Well, it's one asset class.
One asset class.
Right, like a number of music kind of rights underneath that.
My mistake.
Right, but it's one asset class.
Yep.
So you've got a number of kind of song and maybe even album, or is it just kind of purely on a song-by-song basis?
It's purely songs. So it's about close to 7,500 songs.
Wow.
There are 27 catalogs.
Okay.
And these aren't junk songs. These are proper songs.
Okay.
It's interesting because the foundation of this business is built on reputation, which is essentially what the music industry was really all about, at least on the corporate side prior to the streaming era. The stimulus for where this comes from is the industry had been in a 15-year decline. Piracy really throwing a curveball, and about 4 years ago, things really started to change with the kind of mass appeal of streaming services. Now we can start getting technical about profitability or whatever it is, but nevertheless, the past 4 years we've seen consecutive growth in the industry, thanks to the likes of Spotify, Deezer. Apple Music, if you really want to throw that in there.
But I mean, the thing that I understood about hypnosis, and correct me if I'm wrong on this, is that they're also able to then kind of sell on some of those rights in terms, not necessarily sell on the rights, but actually try to promote the usage of that catalog or usage of that songs in popular media, right? Like, so they could kind of push your Netflixes and Amazons and whoever else when they're creating content to kind of use that music, also in commercials and things like that as well.
Spot on, exactly. So it was founded by Mirk Mercuriadis, Greek tongue twister there. He was the ex-manager or former manager of the likes of Elton John, Guns N' Roses, Beyonce, Mary J. Blige, Joss Stone, and the list goes on. And really the crux of this model is essentially they have this catalog of around 7,500 songs. They have 12 executives on the team that each manage 600 songs. And because they have strong industry relationships, the real focus here is maximizing synchronization income. And what synchronization income is exactly what you've just said, is ensuring that they can get these songs replayed or hooked up in deals in the likes of movies, streaming services, TV shows.
Commercials.
Exactly.
Right.
So what they're doing is they're buying really attractive songs, and then they're kind of pushing their agenda in the industry to get these songs promoted.
It's almost like you have an underutilized asset, right? So
Completely.
You have the underutilized asset, and then you're like, how do you increase the utility and the utilization of that asset, leveraging their network, right? So it's very different from other alternative asset classes. So if you have cars, for example, or you have, I don't know, fine wine and things like that, you don't want to use those, right? You want them to stay kind of in tip-top shape in terms of like how you manage the crate of wine or, you know, kind of the engine in the car. But with music, you have that asset, and then if you can promote it to the right level without diluting kind of the appeal of that artist or that song, that's how you can maximize the income from that specific asset.
Completely. So to put it into context, right, considering the industry was in such a slump, copyright libraries were sold at distressed valuations, right? So they weren't valuable. So Hypnosis saw this opportunity, buys up the songs or the catalogs, and since then, over the 3-year historical income since purchase, there's been almost a 13 times uplift in the value of those songs.
Wow.
Because why? Again, the industry is actually experiencing growth, and so essentially, you're technically winning just on the appreciation of the asset itself, let alone you're pushing its revenue generating capacities further.
That's really interesting. I wonder about the dynamics of the actual kind of song creators and the writers, right? So if you are an artist, and let's say, for example, you have toured as much as you're able to tour, you're an Elton John or other kind of artists who are saying, okay, I'm done with that side of the business. And then you're sitting on all these assets that you yourself can't go out and promote or inflate the value of because you don't have those relationships. You're not quite sure about the financial side of this. So selling that asset on gives you a short cash windfall. And then the buyer is able to take that underutilized asset and try to actually not necessarily inflate, but grow the value of that asset as well.
Which is what's so, I guess, it's a little bit risky about the streaming industry is, stream farms or click farms are realities. If you really want to, then you could say, okay, cool, we're just going to set up, I don't know.
Yeah, a farm in Indonesia.
Yeah, exactly. And then we're technically
growing the value.
Yeah.
It's interesting though. I think if that becomes a problem, my guess is the streaming platforms will take more of a hold on it. I think when it does become, kind of like at the level of a Facebook with fake news, right, with fake clicks and fake kind of streams, and it's really impacting Spotify's bottom line, especially as a publicly traded company now. Likewise for Apple with Beats and everything else that they've got on the streaming side. I think when the click kind of fake streams issue becomes a real big issue, that's when they'll kind of pull the plug. But my guess is that, even relatively, the stream revenue comparatively to the commercialization through media and other sources, especially if you're starting from like a standing start of almost zero for some of these songs and then kind of growing that. And it almost becomes this flywheel, right? You get the song, it gets popular on, kind of by being seen in a commercial or a
TikTok
Netflix show or TikTok, right? And then you grow the streams, right? Because people are Shazamming that song. And it doesn't matter if the song is, 10 months old or 10 years old, right? You can kind of stream any of these songs. You can get access to this. You can grow the revenue and grow that flywheel. So even if it is a song from 1992 that's being played on a show from 2018, right? If that show kind of grows in popularity in 2020, right? All of a sudden now you've got an increase in streams as well. So everybody kind of, or every kind of media that's using that is growing the revenue that's associated with that song. It's almost genius.
Music IP though is an extremely durable asset. If you think about it, just, that's why private investors are turning more towards alternative asset investments, because likes of Brexit or Donald Trump's tweets or coronavirus create political and economic uncertainty, which affect the public stock market. Those don't affect how much you replay the value of a song. Actually, they might increase.
Yeah, it might increase it because you're at home spending more time looking at kind of more content.
You need those endorphins because the world's become extremely depressing in 2020. That aside, though, it's also the fact that these rights last for more than 70 years if a co-author dies. So, sustainably, the focus of Hypnosis is really ensuring that they're acquiring 100% of those songs, minimum 35%. But these aren't, poor songs. There's the likes of Justin Bieber, Blink-182. They've got both, but it's the holistic rights of that song.
Yeah.
You can unpack, the different types of rights at another point in time. It gets quite technical. But he's also got writers' credits and rights as well. The likes of Pooh Bear, who's been integral to writing for Justin Bieber. The likes of The Dream, and if you remember him from 2006, he's still very much involved on the writing side. But the interesting part about Hypnosis is that they've raised close to £400 million through IPO.
Wow. It'll be really interesting to also see if they use some of that catalog for sampling as well. So you mentioned The Game, and that's kind of what sparked my thought of you've got more kind of recent artists almost doing covers of 90s and early 2000s kind of songs. What was the the song that I was telling you that I was listening. Oh, Little Uzi.
Lil
Vert.
Uzi Vert sampled Backstreet Boys.
Backstreet Boys, yeah.
I Want It That Way.
Yeah, exactly. So he's got a new song that sampled a Backstreet Boys song from almost 30 years ago, right? And he's it's crazy, isn't it, that it's been that long, 25 or so kind of years ago for that Backstreet Boys track. And now Little Uzi Vert is kind of not even using a sample, but basically doing almost a cover of that track. Now, all of a sudden, that asset, that song, which was popular that many years ago, probably saw its peak in terms of commercial revenue for the band and the original writers. If they sell on that asset thinking, well, hey, you know what? We're not going to get Lil Uzi Vert to kind of do a cover. Now, all of a sudden, Hypnosis potentially could use a song like that and see if they can get other artists to cover, sample, and then grow the revenue that way as well.
Dude, it's genius. And, something I want to point out, actually, is despite the effects of the coronavirus on public markets, the FTSE 100 saw an 11% drop of its value, this week. Hypnosis stock price largely withstood the market pressure.
That's crazy.
Okay. And
so you've got a hold there, right? So you've got, your assets or your companies like Zoom and Peloton, which are kind of growing in value. And Peloton's another one, right, that kind of grows from this. And so now Peloton becomes a revenue stream for some of these songs as well, because that's another kind of distribution mechanism to make additional revenue. And it's funny how Zoom and Peloton are growing in value and Hypnosis is kind of holding its value throughout this storm.
So the FTSE 100 has performed, it's had its worst week since the global financial crisis in 2008.
Wow. Yeah.
And just as much as 14 hours ago, it was announced that Hypnosis has been added as a constituent to the FTSE 250 index, effective as of March 20th.
The most valuable 250 companies on the FTSE index.
Yeah, and that's a new fund focused on music rights.
That's crazy.
Which is awesome. I mean,
which is going to have songs from Bieber 10, 15 years ago.
Blink 182, and some other throwback artists, some which actually, if you're born in the 90s, you won't even know who they are. But those tracks alone are responsible for majority of the value of the fund. But what's interesting to point out actually is a large, if you look at the cap table for Hypnosis, it's actually just asset managers.
Really?
Yeah.
So the asset managers, so for those who might be new to this kind of lingo and world, the asset managers are professional kind of fund managers, right? Who are trying to just kind of make their money by owning some of these assets, either on the public or private markets, and they will have limited partners or investors who will invest in their funds, and then it's their job to create value for those investors. And it feels like those are the ones who are buying up assets like Hypnosis or stocks and shares like Hypnosis in order to kind of grow their value. Is that right?
Spot on.
Wow, that's insane. So, those are usually the ones who are good kind of predictive indicators of where the underlying value is in a lot of cases. So it's really interesting to see that group of investors buying up that kind of asset.
Look, it's very capital intensive. I'm not going to lie.
Sure.
I mean, these catalogs, even if you go into something like royaltyexchange.com and you want to just personally buy a catalog in your own capacity, you'll find that anything of reasonable substance costs a lot of money. Now, Mercuriadis and Hypnosis are taking it to the next level, considering their industry relationships. They have the likes of Nile Rodgers on their advisory board, etc. You're spending a huge amount of money. They've spent over $650 million acquiring catalogs, and those catalogs and hits have been recorded by the likes of Adele, Beyonce, Ed Sheeran. The list goes on.
And that's on your kind of like one extreme, right? It would be interesting to see if Hypnosis or others kind of come in and try to disrupt the market even further. If you see things like income sharing agreements around new and upcoming artists kind of take hold, right? Where maybe the asset hasn't performed as well as it could because it doesn't have a major label behind it or it's not getting the right promotion, but that it's got value. So it'll be interesting to see if artists end up almost selling a percentage of their future shares to professional managers like Hypnosis.
This is the new label model. This is the way that you become profitable and build a new label in the 21st century.
Yeah, it's the asset and then actually pumping up the value of the asset. It's not about, hey, let me organize a radio station to go and play it.
Exactly, which is what Spotify is essentially doing.
Yeah.
The promotion side of things, they're kind of contractually limited in the context of how they've set up their commercial agreements with their labels, even though they've tried to do it on the side. But Mercuriadis and them are saying, okay, fine, we have these skills. This is what made artists successful in the 90s and early 2000s. We're instead going to acquire these rights and continue to work with these artists, and there's still capacity to potentially take on new artists once they've kind of solved their teething problems initially.
Wow, it's a phenomenal kind of shift, right? Like, especially for somebody my age who remembers kind of the mixtape and remembers recording off radio and not necessarily seeing kind of the revenue generation for the artist or for the label through a lot of that kind of music interaction. And now to have seen how far things have come, whereas I can make a playlist on Spotify, I can create and share that playlist, and the artist is going to get paid. And there might be secondary markets around that kind of track or around the track listings around that. That's insane.
And if you think about it, though, there's still so much more upside because emerging market maturity in the streaming space is still very nascent. You have data constraints, feature phone legacy, even when it comes to automobiles. I was listening to a talk the other evening from, I think it was the head of corporate development of Spotify, who mentioned that audio is under-monetized by 10 times compared to video.
Wait, hold on. Can you say that again and say that a little bit slower for the audience and maybe and unpack that a little bit? So,
okay.
So what did he say about audio and the monetization of audio?
I get too amped.
Yeah, totally.
So audio is under-monetized by a 10 times multiple in comparison to video.
Right. So what you mean is when there is audio content, the monetization of that audio content is 1/10.
Correct.
Of kind of how video is monetized.
Exactly.
Wow.
But the likes of AirPods, wireless headphones, voice technologies in the car,
home speakers, all of that.
Exactly, have enabled access or opportunity to potentially monetize or increase monetization or reduce that delta in the monetization multiple between the two mediums. Now, kind of unpacking that, Spotify is focused on podcasts. I mean, they had the acquisition of Gimlet, etc. last year.
And The Ringer, which is a media and sports podcast that Bill Simmons sped up after leaving ESPN.
And they're focusing on how, podcasts very much mimic the radio format as it is, which, yes, is partially true, but also talks about how, there's opportunity for the likes of storytelling, etc. And that's where you see potential upside moving forward. But kind of, in my opinion, I don't buy that because that was around prior to the television. I mean, like, you're still mimicking radio models. Like, when you look at the Chinese podcasting space, and maybe because the cultural significance is different, but people are prepared to pay a premium to learn new things, to upskill.
But I do buy that it's slightly different in terms of how the audio distribution channels themselves are monetized, right? So previously you would have ad revenue in between, like from, it was quite, I think I mentioned this on an earlier podcast about when we were in Toronto and my kids getting annoyed at the radio because of the commercials, right? Which is what we grew up with, right? Like radio, television with commercials as the monetization for those channels. And I think you mentioned the Chinese market where I think people are willing to almost micro spend, right?
Yes.
On a per, kind of listen or on that per session or on a monthly subscription. And I think we are seeing some of that model shifting into the European, US, North American, the more kind of established markets around media. And I'm wondering if we're going to see that more kind of separation of these different commercial models where the audience is actually paying for the access to that music.
Yeah, it's exciting times for the streaming platforms. I don't want to veer off too much into that discussion because I guess we could unpack that for a long time.
Sure.
I think the biggest challenge for something like Hypnosis is determining an accurate value for their songs moving forward, because historically they seem to have acquired songs which have a strong reputational pull.
Yeah.
And you would typically value those through a DCF or discounted cash flow model, looking at historical income and being able to project that forward. There's enough data there to do that.
Now.
Yeah, it's essentially like growth equity investing, whereas like the new songs is like VC, it's early stage, you have no financial records, and you're kind of like, well, we got to determine the brand value of the artist and what their upside is moving forward.
It'll be interesting to see if you get kind of like sector multiples for the music industry, right? Like what's a jazz multiple versus a hip hop multiple? Even within those industries, do you get kind of micro segments like, kind of your old school hip hop multiple versus your new school kind of South hip hop kind of multiple on that side as well, to understand what those DCFs actually look like on a per genre or subgenre level and basis.
I mean, it's definitely there, and we saw it with Royalty Exchange when they acquired the Bass Brothers catalog. The Bass Brothers were integral to Eminem's success, not actually Dr. Dre. Kind of divorced his relationship with them in his rehab phase, and they tried to IPO Royalty Exchange using Eminem's rights, and the forecasted cash flows on the back of the success of those songs. So you are starting to see that. And I think we're at a very exciting time to potentially see a whole new monetization model and a whole new investment industry emerge in music IP. And as you know, I've been a massive advocate for this for a very long time.
Yeah, it's funny to see the world kind of catching up, right? Or these channels or these kind of revenue models or fund structures. I mean, part of it is, digital kind of taking it to the next level, right? From a distribution perspective, from a channel perspective, things like Patreon or things like Peloton or whatever that might be either physical products or commercial products didn't exist kind of 20 years ago, right? So the fact that these new products are now existing, the distribution channels are just kind of different now. And so we're seeing kind of the world catch up to the ideas we might have had a couple of years ago.
But I think there are two factors to highlight here. Traditionally things like music rights or catalogs were available to ultra high net worths, institutional investors who had to pay to play, to be there. Now you're finding that because of democratized access as a result of the exponential growth in technology, infrastructural platforms that are allowing for people to think innovatively and actually build businesses in the space, leveraging on their relationships because they have to think differently because things like labels and other incumbents might not be around in the future. And then on top of that, you've got... oh man, I've just lost my train of thought.
Well, I will say that it feels really interesting to kind of see that, the artists have kind of changed their kind of mindset, right? So you had the struggling artists going to your pubs and clubs, trying to get the attention of the A&R artist to try to potentially get a record deal where they would take on some debt from a promotional material perspective, hope to recoup that debt in terms of album sales, and then hopefully tour on top of that to become really kind of successful financially. Now the artist kind of has a very different kind of model, right? Where you can put your music on digitally. Hopefully you get discovered digitally. Hopefully you get promoted digitally. Maybe you make revenue through the kind of like performance basis, but at the same time you could potentially sell a catalog and then become quite wealthy off the sale of that catalog. And the person buying that catalog then is able to also kind of commercialize the asset even further. I do want to kind of take a little bit of issue with one of the things you said about the democratization of it, because I do feel like, the democratization of it is happening to an extent, but it really is the professional managers and from an asset ownership perspective, and the professionals within kind of organizations like Hypnosis that have the relationships in order to help those things promote. It'll be really interesting to see, and I think this is where royalty exchange versus Hypnosis kind of differ, right? Your royalty exchange is hoping that by owning the asset, somebody else is going to promote it. There's going to be some serendipity in terms of that song getting promoted again and the value increasing almost organically. Whereas your Hypnosis is saying, no, we know we can promote this
artificial
song, right? We can, not even artificial, but it's almost manipulated, right? It's like, we can make this song worth more.
How do we get around this from the FCA? That's what I want to know.
Well, the FCA, I mean, if you think about it as an asset class, right? Like imagine if you're a farmer, right? You're able to grow that, and so, or even the oil side of things as well, right?
Yes.
You get production, you get supply, demand, and that's how they're managing.
Is it not kind of like insider trading, or there's not murky waters there?
Well, no, because it's basically promoting an asset that hasn't been promoted, right? So if you know that, hey, I'm Dario, I'm a hip hop rapper from South Africa who's made great music, right? But at the same time, you don't have the access to Netflix or Amazon to actually promote it. So and it's the same thing that's been happening for generations of artists, right? You're at the service of the label.
But then those people that are involved in those relationships can invest directly in the fund and profit off their own activities, which is the part where I'm just like, okay. I see what you're saying. Here's an example, right? So a company, we've spoken about this before, I think it was in episode 1, Vest.
Yep.
Right? They're acquiring rights, but not the masters, right? It's publishing rights, and they provide a cash advance to the creative. And just to kind of rehash here, when a song is created, there are normally like 13 to 15 people involved in a Beyonce song, and they'll find random person number 14 who has a minuscule percentage of,
or people 10 through 13 or whatever.
Sure, but not people which have a material holding, rights holding. Whereas Hypnosis is going straight, Emil Haney, the real deals, Tom DeLonge,
these are the major producers.
Yeah, so your revenue. The opportunity to maximize revenue flows through into your pocket as an investor directly. Whereas on the Vest side, it's got to go through a bunch of hurdles, and you're getting that right paid directly to you, but there's a time gap and a time delay, and it's complex, which makes it more challenging. But on that side, I guess there are less checks and balances, so it becomes a bit more difficult to determine. I don't know.
Yeah, I mean, and this goes beyond just kind of music, right? It's probably all media, right? Where you've got the rights owners kind of being able to then kind of promote the actual underlying asset and then capture the value on that, right? You're right that they are kind of really closely kind of linked, and we're not necessarily seeing the regulators or anybody else for that matter from a market perspective come in and try to kind of either rectify some of that kind of incongruency in terms of who owns the asset and who's actually capitalizing and maximizing on the asset. It'll be interesting to see, like, I mean, there's been a lot of speculation around, somebody like Netflix potentially capturing somebody like Spotify and doing something like in terms of merging the markets, right? Because you're media distribution, and right now you're in film and television, but can you also take in audio in that sense? And in that case, if you've got the distribution and then you're kind of, Spotify's kind of dabbled in kind of almost label-like activities. So if you have ownership of the media, then you're promoting that media on kind of other content channels. It'll be interesting to see if that's the point where people say, actually, this is where a regulator needs to get involved because it's just too close together in all of this.
Totally. I think, actually taking a step back, I do want to go into the different revenue channels here. There are basically 8 sources of revenue per song, right? So you've got 3 different types of royalties. You have mechanical royalties, which are due when a copy of a song is made. Right, performance royalties, which are due when a song is performed live or broadcast, and synchronization income, which is due when a song is used in another form of media or moving picture. So kind of digging down a bit, mechanical royalties, right, which is due when a copy of a song is made, comes in the form of a physical, CD, DVD, vinyl, or digital, being downloading or streaming. Performance royalties, when a song is performed live or broadcast, comes from radio, streaming, or played in the likes of a shop, gym, or a restaurant. And synchronization income is the likes of TV adverts, movies, and video games. So, I mean, you're acquiring proper rights from proper songs, proper writers, proper artists, and you're distributing them or maximizing their upside in all these channels. It's a really great model.
It's funny, and it kind of leads us, I think, to a natural kind of conclusion where we can talk about some other stuff, but the intrinsic kind of value of the song, right? The song itself has a tremendous amount of value, but it's kind of like an underutilized, undercaptured value that you kind of have to have the relationships in order to really kind of maximize that value that you can create out of that asset in terms of the actual song.
Totally. It's very, very cool. If you're interested in kind of looking at alternative asset investments, take a peek at Hypnosis, or reach out to one of us if you want to learn some more.
All right. Thanks, Dario.
Cool. So Farhan, talking of new music, I see Kendrick Lamar's just started his album release cycle. Supposedly, this pglang.com is popping up everywhere.
PG Lang.
PG Lang.
Okay.
Maybe we're pronouncing it wrong, or like the PG is meant to come across something else, like six black and black,
Yeah.
or like Dead Mile 5.
Sure.
But super cool, and I want to read you kind of what that means.
Go for it. To Kendrick.
Yeah. So according to Kendrick Lamar, PG Lang is multilingual. It says, our community speaks music, film, television, art, books, and podcasts because sometimes we have to use different languages to get the point of our stories across. Stories that speak to many nations, many races, and many ages. That is why our writers, singers, directors, musicians, and producers break formats when we build ideas and make them real for the curious. Putting round pegs through square holes is not a process, but we embrace the idea of anarchy and challenges that make us stronger. PG Lang is focused on using our experiences and nurturing our many collaborators to build stories that are equally accessible and engaging, then fitting them with the best media. We are creators.
That's really interesting. I mean, it's something that kind of speaks to what I think Kendrick has done almost organically in his career, with kind of doing the soundtrack to Black Panther and the integration of Black Panther and the music being so vital to that, as well as kind of his creation, as well as his label, his own musical creation, and then his label and getting other artists as well. It's interesting to see if he's kind of breaking down and saying, okay, well, I'm about to go beyond just the music side and really kind of take a hold on different kind of media industries.
I find it, really inspirational at a time where the creative industry has typically suffered.
Yeah.
I guess some may challenge me on that statement because there have been new kind of frameworks and opportunities that have emerged for almost everyone to be a creative. But in the literal sense, to actually monetize and to have the spotlight on you for all the right ways.
Well, it's organize, monetize, and distribute, right? It's kind of like coming up with a collaborative kind of criteria that kind of brings people or artists together,
Yeah.
right? So like discovery is really hard still, right? And if you could kind of group people who have kind of a very kind of similar ethos and then help them monetize and distribute, I think that could be really powerful.
He's rolled out something called the PG Lang Times. I see it's in partnership with LA Times. They've put out a 4-minute video which might have some samples, has some samples or audio samples of what could be
Upcoming tracks.
Yeah, which is supposedly, or from what I can understand, rumored to be rock infused. I think Kendrick's always got something very thought provoking to release or to say, which is really great in today's world. I think you couple Kendrick's kind of album rollout with the likes of The Weeknd, which it's interesting. He released 3 tracks and his album's only coming out on March 20th. So he's touring in London on October 13th this year.
Yeah.
We're in for a great year of music.
Yeah, I think so too. It'll be really interesting to see what the Kendrick kind of album and movement actually looks like. And speaking of something that we've been really kind of pleased with, the disappointment around kind of New Music Friday this week. Not a lot there in terms of songs that we've been thinking actually, oh yeah, this could be a banger. I think I mentioned to you that my top track, which kind of says a lot for the New Music Friday quality, has been the Demi Lovato track. And I think that says quite a bit there. I mean, it is a good track. It is quite a different kind of departure for Demi, but there wasn't just a lot of quality. I think I've been singing Lil Uzi Vert's kind of Backstreet Boys cover and Demi Lovato, which I feel embarrassed even that came out of my mouth.
Yeah. You need some counseling.
But that being said, hopefully the rest of the year we'll kind of recoup and we'll see a lot of really great music coming out the rest of the year.
Totally. Take a listen to Russ if you're interested. Really great. He's like a hip-hop infused John Mayer. He's even had John Mayer's endorsement. Got some great singles. I know Spotify's algorithms don't always work so well when you're looking at playing a specific single. His release model's always been different in that regard. Shake the Snow Globe's a great album. I mean, don't you agree?
Yeah. I really did dig Shake the Snow Globe. I think if you're interested in kind of like the story behind the music as well, there are some great interviews. I think you were mentioning with Joe Budden.
Joe Budden's Pull Up season. Take a listen to that season 2. Some great interviews there. One with Big Sean focusing on depression as well as the mechanics behind the music industry. Russ talking about kind of his attitude and people's perceptions as well as his release strategies in today's world. So if you're an aspiring artist and you're listening to this, take a listen. Otherwise, that sounds like a wrap for this week.
Yeah, I think so. So thanks again for listening to Season 2, Episode 4 of Middle School Music. You can find us on Twitter at MDLSKL_music. You can find me on Twitter at Farhan Lalji. Dario, where can the good listeners find you?
On at Dario_Devet. And
is that with a W?
With a W.
With a W.
Is Farhan with a PH or an F?
No, it's got an F.
Okay.
Thanks again for listening, and we'll catch you next time. See ya.
Ciao.
Bye.